Hey guys, welcome to Stock Talk. Today, we're going to do something a little different and talk about a specific event rather than a stock in general. As you may have guessed, we're going to be talking about Coinbase finally going public under the ticker COIN. In this video, we're going to talk Coinbase and what we think about it as an investment. We're going to cover exactly what they do and some of the advancements they've already made. Finally, we'll discuss what we think about Coinbase as an investment and why it's a buy or a sell. Let's get right into it. But before that, make sure to hit the like button and subscribe to learn more about stocks. Also, let's hear your opinion in the comments down below. So as most of you already know, on April 14th, Coinbase went public. But before we get into that, we're going to talk about the market a bit. As many of you are aware, the market dropped fairly heavily today. That's the headline. However, if you look more closely at what actually happened, you'll find the same culprit that's been leading most of the market drops in recent days, the tech sector. For over a year, analysts have recognized the tech sector to be somewhat overinflated and overvalued, with the average price-earnings ratio far exceeding what would normally be considered healthy. Part of this is due to the bond market being completely dead due to the fact that interest rates are zero, leaving really only stocks as a place where investors can hope to make any money. And part of this is due to the Federal Reserve's operations, which include buying stocks and corporations' decisions to buy back their own stocks. Recently, however, a change has been occurring. Interest rates have been rising somewhat, especially on longer-term treasury yields. And due to the seesaw effect the bond market has with the stock market, i.e. as bonds become more attractive, investors flock to bonds and away from stocks, this has impact on the most overinflated parts of the stock market, which largely includes the tech sector. On April 14th, the Federal Reserve announced that while it wouldn't be raising interest rates unilaterally, it would stop buying as many bonds. However, due to the fact that as demand for bonds drops, interest rates on bonds rise to make them more attractive investments, many investors saw through this ruse, and again, the market, led largely by the tech sector, fell in response. While that certainly had an impact on the drop in Coinbase price between open and close, it certainly doesn't tell the whole story. Coinbase is a cryptocurrency wallet and exchange, meaning that it's a platform for people to not only buy and sell cryptocurrencies, but store them as well. Many speculated this would be an initial public offering, or IPO. It's decided to just bypass a lot of the legal hubbub and offer their shares directly to the public. The main benefit of a move like this is, as I mentioned, being able to avoid all the paperwork and fees associated with traditional IPO, and frankly, kind of fits in with Coinbase's whole ideal regarding the democratization of finance and etc. And to be completely honest, while this is a cool way to circumvent the traditional IPO, they aren't the first ones to do this. Spotify famously also offered its initial shares directly to the public a few years back, and with the rise of special purpose acquisition companies, or SPACs, it's also evident that this could be part of a broader industry pull away from the legal and financial headache that is a traditional initial public offering. Beyond the technical aspect of why this public offering was neat and unorthodox, many talking heads see this as a kind of watershed moment in the world of cryptocurrencies, and it seems like investors agree. While Coinbase actually sank in value from its open, having opened at 381 and closed around 330, Bitcoin and other cryptocurrencies listed on the Coinbase platform actually rose in value, implying that the increased publicity brought to the platform because of their public offering inspired people to actually get back into Coinbase or sign up for the first time and buy crypto. Personally, I think that Coinbase is a buy. We recently made a video talking about how Coinbase is not only the most prolific, widespread, well-known crypto wallet and exchange, it's also among the safest and actually helps pioneer safety features for its users. Additionally, Coinbase seems like a good way to invest generally in cryptocurrencies, and everything people love about cryptocurrencies, like the blockchain technology that makes them happen, without putting all your eggs in one basket. While it's true that Bitcoin is obviously the biggest cryptocurrency out there are hundreds if not more at this point, so putting all your crypto-bound money in one currency would be a bad move, kinda like putting all your money in one stock just because you believe in the overall stock market. Coinbase's user base, number of transactions, and overall bulk of money exchanged on the platform have all been steadily rising over the past year, and while sure a lot of that is due to the general feeling that the stock market itself might be overinflated and the bond market is 100% dead since interest rates are literally zero looking all the way out into October, a lot of this is also a long time coming. Bitcoin spiked, obviously, in 2017, and then plummeted, and many analysts thought that that was the end for the coin. But it recently broke its 20k ceiling and has been shooting to the moon basically ever since then. And, like I mentioned, Coinbase is a good way to mop up a lot of the benefits that come from that. Since Coinbase's value rises as the amount of users they have, amount of money exchanged on the platform, well, everything rises. And so that's a good investment to make while avoiding the pitfalls of having too many invested in one single asset, like Bitcoin. Many people are sad that Coinbase closed lower than it opened today, but as we warned earlier, the first day of trading is always incredibly volatile, and in the long run, this only means that it's now a better value to buy Coinbase than it was when the stock opened. The real trend will only start to be seen after a few weeks or months, when we look back at the data. But in the meantime, I definitely feel that Coinbase is a strong buy. There's been so much hype around this public offering, and cryptocurrencies are slowly but surely beginning to find more mainstream acceptance, with companies like Microsoft and Home Depot and other heavy hitters like that even allowing customers to pay in Bitcoin. That it just feels inevitable at this point that if not a second currency, crypto will at least be a huge class of commodity that people trade for a long time going forward, much like gold or silver. That being said, how do you feel about Coinbase? Did you buy? Will you buy? Let's hear your guys' thoughts. So guys, that was a brief overview of the Coinbase public offering and where we think the stock is going to go from there. Personally, I think it's a steal. Sure, it had a rocky first day, but all public offerings are volatile, and that doesn't mean anything about the health of the company or its value as a long-term investment. But what do you guys think? Is Coin a bull or a bear? Let me know what you guys think in the comments down below. If you like what you saw, remember to smash that like button and subscribe and turn on notifications so you don't miss out on more videos. And I'll see you guys in the next one.